Ladies and gentlemen, Jerome Powell, the Fed chair, may have just crashed the entire crypto market with the remarks that he made earlier today. Now, we're going to look at exactly what these remarks were. I'm going to have you listen and hear his own words, because the remarks themselves, it's less about that he said they were going to raise interest rates. I think the market expected him to raise interest rates. The candidness of how he spoke, I think, spooked the entire market, and I think it's a sign of what's to come. Keep in mind, the Fed chairman, when he speaks, he's always putting a rosy spin on everything. Everything's going to be positive. He's always comes off somewhat optimistic, except in today's remarks, he was pretty candid. This tells me that there's more bad news to come. Now, as cryptocurrency investors, as investors in general in the financial markets, I think that we have to understand how we can adapt and how we can adjust our strategies based on what the market's going to do. We don't get to control the market, but we get to control how we invest in each market condition. And I'm going to talk about some of the strategies that I'm using right now going forward. Please keep in mind, nothing on this channel should be financial advice. I'm just a cryptocurrency YouTuber. But if you like a candid, honest, unbiased approach, objective approach when it comes to the cryptocurrency markets, do me a favor and smash that like button. Of course, click the subscribe button, click that bell notification icon, and click all. We're going to take a look at what Jerome Powell's comments were here in a moment, but real quickly, let's just look at the market, where we're at right now in the crypto market. The Bitcoin price is at $20,000. We're down 5.9%. Look at this, Ethereum down 10%. So the market's pretty red in the past 24 hours. Just about everything. We got to come all the way. Everything is red right now. Oh, True USD's up. We got to come all the way down to the Huobi token, up 3.91%, number 55 on the market cap. There may be some crypto investments to make in the micro sector, but overall the market's down. And I believe that it could go down potentially a lot more, but that doesn't mean that we can't find places to invest. With that being said, I did a video a while back. I did this video June 29th, and I said, will Bitcoin crash below $5,000? I'll link this video above in the cards. I'll put it down in the description. In this video, I talked about the very thing that's happening right now. I talked about the Fed potentially raising interest rates, which they're doing right now. In this particular video, I had several people tell me, oh, the Fed's not going to raise interest rates. It's not going to be that bad. You're being pessimistic. It's not about being pessimistic. It's about trying to look at the market and trying to adjust your own investment strategy with where the fundamentals say the market could go. I encourage you to watch this video. Tell me if you think I was on the money or not based on what we're going to cover in today's video. Now, when it comes to investing in cryptocurrency, I will tell you, in a down market, you want to do everything that you can do to manage risk. That is the name of the game. The market could potentially go much, much lower, but you don't want to invest from a place of fear. So you have to manage risk. Hedge your risk. You have to understand what your risk tolerance is. In a down market, this is more important, or I should say in a trending downward market. If you're optimistic long-term for Bitcoin, this isn't the time that, personally for me, I don't cash out. In fact, I just continue to buy more, but you can only buy more if you know you're using true risk capital, money that you don't need to pay your bills on. And if you don't have money to invest in crypto, you can always earn passive crypto. Go down in the description, subscribe to our free Crypto Passive Profits newsletter. In that newsletter, you're going to see several ways that you can start earning small amounts of crypto totally for free, up to 5 streams of passive crypto income. Just put your name, email, phone number, click submit. Let's go over here to Jerome Powell. Let's look at what he said. I also want to look at what someone else said earlier today in a video that was released. I think the video was actually recorded maybe yesterday, but there's another entrepreneur, multi-million-dollar entrepreneur, someone who's worth hundreds of millions of dollars. And I wanted you to hear what he had to say about the current recession and the market rates, because as the market conditions and what's going to happen, to those that are rich versus those who are, say, middle class. Because I think it's important to understand that the less income that you have, the less assets that you own, the more you're essentially a victim of the economy. And you really have to fight a headwind to get ahead. I want to kind of prove that to you a little bit. I think we inherently know that, but I want to prove that to you with what another entrepreneur said on this topic. When I heard him say it, I thought that was incredible. I wish everyone on my channel could hear it. And then I saw the Fed chairman, Jerome Powell. I saw his remarks today, and I decided, you know what? This is a perfect spot for my audience to be able to hear. Because listen, I make these videos. I started a YouTube channel because I want average people to be able to learn. I want average people to grow. I want average people to learn about cryptocurrency, obviously, because I believe this technology is going to transform the world. But at the same time, I want the average person to become a bit more aware about the economic circumstances that we're in, because I want to see people rise up, become somebody, and do better in life. And if you agree with that, then smash that like button. Okay, let's go. Let's listen to Jerome Powell. This is 1 minute, 41 seconds, but we're going to go through this. I'll stop it, give my incredible commentary, because I know you all love to hear it. That's kind of a joke, but let's go ahead and listen.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
Just want to pause right there. When he's talking about price stability, I want to break this down for those of you that may not be economically minded. He's just talking about prices at the grocery store. We all know that prices have been going up, and I'm oversimplifying this, but he's basically saying, hey, prices in the economy should be stable, and that's what the Federal Reserve is supposed to be doing, is helping stabilize price. That is one of their two main tenets of the Federal Reserve.
Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
So when he's talking about without price stability, we won't have a strong labor market, I think it's important to understand, I've been saying this for a while, we could see right now there's a lot of jobs out there. If you want to go to work, there are people everywhere looking to put people to work. I believe that we are going to see that tide shift, because we may see people start going out of business. And if businesses start closing down, if businesses start shutting down, there is a possibility. It is possible. We could see it becoming very difficult to get a good job. The job market could become very, very competitive. And I think that's basically what he's hinting at right here.
The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance.
Okay, he said right here, it's going to take some time. He didn't say we're rounding the curve. He didn't say this is going to get better. He said this is going to take some time. In other words, buckle up, Buttercup. It's going to be a bumpy ride. He keeps saying things like, we need to use our tools. We need to use our tools. The main tool that the Fed has is essentially just to raise interest rates to combat inflation. It's the only tool they have. In other words, boys and girls, we're going to raise interest rates. This is going to be painful. It's important to understand that this is a man who comes out, and oftentimes his remarks always err on the side of unusual optimism. Usually when the Fed chairman speaks, he always paints this rosy picture of the economy, or less bad picture. This is stunning right now. The markets are down across the board. The industrial average went down 1,000 points today. The Dow Jones Industrials went down 1,000 points today. The S&P's down 3%, 141 points. NASDAQ went down 3.9%. The Russell 2000 went down 3.3%. The VIX, this is volatility. Of course, it's volatile, so of course the VIX is up, but this isn't a measure of any particular market. What blew my mind was that the market dropped so much. I actually looked at making some traditional stock plays where I was looking to short some companies, and I thought, you know what? The market is, all the financial news was saying, hey, Jerome Powell's going to probably raise interest rates. He's probably going to announce that. I was assuming that was already priced in the market, but I think the candor of his remarks, as blunt as he's been in these remarks, I think that's what spooked the market overall. I think the whole market's like, holy shit. I think that's what's happening. But it's okay. I want you to know, as an individual, you're not responsible for a Fortune 500 company. You're most likely not the CEO of some blue chip stock company. You are going to have opportunities. It doesn't mean you won't feel the pain, but there are some things that I believe we can do as individuals. And I'll be talking about that a little bit later in the video. But let's keep going for now.
While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down.
I said that on my channel when last month the numbers came out. Let's keep going.
So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today.
This is annoying to me. Back in January, the Fed chairman and Janet Yellen, they were saying that inflation was going to be transient. Don't worry, inflation is not going to be bad. It's going to be transient, meaning it's going to be temporary. It's going to be short term. That's what these morons were saying back in January of this year. I said on this channel, I did not necessarily believe that inflation was going to be transient. And now there's like, oh, everybody's attention. These are the people that are in the know. I'm going to tell you something, ladies and gentlemen. If you wait for every expert to answer our questions, then we will become the victim of their lackadaisical non-responsiveness when they need to be responsive. We have to be proactive as individuals. It's responsible to us to protect our families and our finances every chance we can. I always believe in being a proactive defensive investor, and it's because I don't believe that we can allow the who's who in government, to the politicians, the appointed officials, to be able to take care of us, because we as the average individual, listen, we vote to put certain people into office, but they don't do what we want as the voter. They just tell us what we want to hear as the voter. They do the things they do for the people who put them in the power. And you may think that you put them in power when you vote, but the reality is the people who put them in power are the people who are willing to pay for their campaigns. The people that are willing to give them sweetheart deals and give them, high-paying jobs with investment banks once they come out of government service, or pay them, multiple six figures for speeches once they're no longer a politician, or hire them in some, $500,000, $1 million a year job as, to head up some lobbying group somewhere. And so it's important to understand these people don't work for us, but we can still get ahead as long as we understand that and we understand what rules we're playing by. This frustrates me. Everybody's paying attention to inflation. No kidding, moron.
The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. History shows that the employment costs of bringing down inflation are likely to increase with delay.
In other words, the longer we wait, the more employees are going to be screwed. I think they're already a little bit too late on that, but that's just my opinion. What do I know?
High inflation becomes more entrenched in wage and price setting. Our aim is to avoid that outcome by acting with resolve now.
Okay, I want to back that up. I want you to listen to what he says, because he says their job is to fix a problem that I think already exists. But let's go ahead and listen to this again.
As high inflation becomes more entrenched in wage and price setting, our aim.
High inflation becomes more entrenched in wage and price setting. So here's the challenge. We have inflation. Inflation essentially means, just oversimplification, prices go up faster than wages, meaning you can make $50,000 a year, but you will be able to afford less. You will feel more poor even though you're getting the same dollars. Wages typically lag inflation, meaning prices go up, the average employee has to struggle more. They have to feel the pain. The faster that inflation goes up, the more pain they feel. Eventually, wages will go up, but it takes some time. And he's basically saying, hey, if we don't act now, then there's going to be basically this wage and inflation gap. I'm here to tell you, if you've been to the grocery store, it is clear that the wage inflation gap already exists. It's been existing. I think that he's signaling they expect it to get a little bit worse, and maybe a lot more worse. I'm telling you, ladies and gentlemen, we can't trust these people.
Aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done.
Translation: we are going to raise interest rates, and we plan to continue raising interest rates for now and into the future. So what does this mean? It means that the economy is going to slow down significantly, most likely. It means that we may continue to see traditional markets slide. It means that we could see cryptocurrency prices slide even further. So this is a challenge for those of us that are investors, and we're trying to get ahead. We're trying to do everything we can to get ahead. Then what in the world do we do? What do you invest in? What financial moves do you make? Listen, I'm just a cryptocurrency YouTuber. I am passionate about this stuff. I'm an amateur economic commentator. That is the bottom line. So don't take anything I say as investment advice, but I think there's some common sense things we can do. First of all, it's incredibly important that if you are an employer right now, that you stay gainfully employed and that you do everything you can to make yourself valuable and indispensable on the job. There may be job cuts. You want to make certain that your job is one of the last to get cut. If you don't have a job right now and you're able to get a job, you are able to, you're physically capable of getting a job, then I recommend that you go get a job right now so that you can start building a track record and hopefully make yourself invaluable. Because I do believe that we could see the job market get constrained a little bit. And you want to at least know that your day-to-day needs are being met. Also, when it comes to investing, this is when in the cryptocurrency space, I'm looking at blue chip investments. I'm going to still dollar cost average into Bitcoin, Ethereum, and stuff like that. But I'm also going to be looking at stablecoin yields. I've got a video coming up here in a couple of days where I'm talking about some stablecoin in the DeFi space. I'm talking about stablecoin yields, being able to, there are some places where you can get 10 and 20%, even 30, 40, 50% on stablecoins. I mean, it's strictly on stablecoins. And I'm going to show you some of that in a future video. So make sure you're subscribed to the channel. But that's the kind of stuff I would be looking at right now. Now, if you follow my channel for some time, I still talk about a lot of DeFi projects. I've been talking about the Beanstalk protocol, stuff like that. For me, I would not be taking any unnecessary risk right now. I would not be bringing more funds into crypto unless it was risk capital. At the same time, the reason I only want to use risk capital because I'm going to do everything that I can to prevent myself from having to sell any cryptocurrency assets. Now, to be very candid with you, I'm fortunate. I'm in zero risk of having to sell any cryptocurrency assets. I very, very, very rarely sell out of crypto unless it's to pay taxes. But I encourage you to be very careful with your cryptocurrency investments. You need to be a defensive cryptocurrency investor. What does a defensive cryptocurrency investor do? What does that mean? A defensive cryptocurrency investor is someone who's going to be doing everything they can to earn passive income, obviously in cryptocurrency, but at the same time, even dollar cost average into cryptocurrency. But a defensive investor is someone who is going to do everything they can do by not selling, and they're going to expect that prices are going to continue to drop. See, I believe in a philosophy of try to be right even when you're wrong. I believe Bitcoin price could drop. I believe it could potentially go down to $10,000. I believe Bitcoin price could go down to $5,000. Now you're thinking, well, if you think that wealth, why weren't you selling all your Bitcoin now, waiting to buy back in later? Because if I'm wrong, then the price could take off. You've got to look at what is your underlying thesis when it comes to cryptocurrency investing. For me, I am very long-term bullish on crypto. I've been long-term bullish on crypto since the day I got in. And it's these kind of markets that you start reevaluating your cryptocurrency investment. Is there some sort of altcoin that's going to collapse? Is there an altcoin? Do you still believe in that altcoin? If you don't believe in it, then that would be the time to sell. And maybe take that capital and put it into some of your more apex assets that you believe long-term are going to go up. And so for me, I'm going to continue to buy Bitcoin even on the way down. Because for me, it's about getting Bitcoin at a better and better price. Listen, when Bitcoin was at 60,000, we all wish we could have bought in at 20,000. Well, guess what? We're here again. And for me, if the price goes down to 10,000, I don't panic. Some of my friends who know me in real life, they're like, oh, how's that crypto market doing? Oh, are you getting hurt? They act like I've got to make a trade every day. Yes, I do still trade cryptocurrencies, by the way. And yes, I still can earn some cash flow when the market is going down. However, for me, my biggest assets are not what I'm trading. It's what I'm holding. So for me, I'm still adding Bitcoin to my cold wallet on every price dip. In fact, I'm looking at mining some Bitcoin. I'm looking at setting up some mining rigs still. Why? Because I don't care if Bitcoin is $20,000, $50,000, or $10,000, $5,000. Heck, I don't care if it goes down to $1,000. It's irrelevant to me. No way, shape, or form am I planning to cash any of this out in the next 5 years, the next 3 years, the next decade. I'm talking about my primary HODL wallet. That wallet is there when we get much closer to mass adoption. That wallet is there because if Bitcoin hits $500,000 one day, $200,000, $1 million one day, I want that Bitcoin to be sitting in my HODL wallet, my cold wallet, the wallet that never touches the internet. I genuinely, and that's who I am. My underlying thesis doesn't have to be your underlying thesis, but my investment strategy is that crypto long-term is going to go up. I don't care what the Fed does. The Fed's missteps right now that they're making in our fiat system is why I believe in a decentralized cryptocurrency could be a currency one day. But we are a long ways away from that now. There's going to be more regulations coming. I believe the government's going to attempt to minimize, if not stop, the effect of cryptocurrency for average people like you and me. I am in this space and I am here early. I am here when it's incredibly volatile. And I am here understanding that the market's going to go up and down. I know that people are going to get wiped out because they're going to risk too much too soon. But I'm in this for the long haul. I'm investing a little bit every single day, day by day. And I believe that is a strategy that if cryptocurrency succeeds, if this ends up working, now you may be thinking, but Wealth, you keep telling me you're investing, and then you say if, but what if it doesn't? Because cryptocurrency is a small portion of my overall portfolio. It is a small portion. And maybe I'll put out a video and I'll talk about more of my overall 30,000 foot strategy. But no matter what I have in cryptocurrency, once I buy cryptocurrency, specifically if I move it to a cold wallet or my HODL wallet, at that point in time, it is essentially gone. I don't look at the value of that wallet. I don't necessarily go out of my way to pay attention to what's there. It is there. I am always buying it. Now, if for whatever reason the crypto market just tanked, remember, try to be right even when you're wrong. If for some reason crypto never takes off, if for some reason all this crashes, so what? I have other investments and other assets that I've been investing with all along. Now, those of you that are small investors, I'm going to tell you, this is not the time to swing for the fence in some super high risk play. It's just not. This isn't financial advice. Hopefully this is common sense advice. This isn't necessarily the time to swing for the fences. But if you have a small portfolio of cryptocurrency, I don't care if it's a few $100s, a few $1,000s, start treating that cryptocurrency. And again, I can do a whole video on this in the future. Maybe I can do a whole series on this if you want. Let me know down in the comments. But start treating that cryptocurrency as if it is $1 million. Start treating that small $1,000, $500 portfolio as if you are responsible for your family's bank. You know, wealthy people have like a family bank. Wealthy people have like family funds, and there's somebody who manages the family funds, the uber wealthy, the billionaires out there. And whoever it is, it may be an investment firm, it may be someone inside the family, they manage those funds. They're responsible for preserving those funds for the future. They're responsible for earning as much return as possible on those funds. But most importantly, they're responsible for not losing those funds. So my take on that in crypto is, I'm not so much in a bear market. I'm not necessarily looking for the 10x, the 100x. You could always stumble onto it. I'm not necessarily looking for that. I'm looking for the singles and the doubles, because even in crypto, singles and doubles are much bigger than anything else that exists in traditional finance. I was talking about a stablecoin strategy today, and the farm that I'm going to be talking about, a friend of mine, someone in our Telegram group actually, he said, so, which strategy are you going with? And I showed him a little degen strategy. I said, but I wouldn't be doing that with tens of thousands of dollars. He was talking about investing $70,000. I said, that's not something I would do. I mean, that just doesn't make sense. I would do the more conservative play. I would do the 50% APR play, the 30% APR stablecoin play, not the 400 or 500% play. You do the stable play, the smaller play, the singles and doubles. Invest defensively. It's not about, listen, I don't care how much you start with. The key is to minimize your losses. And that's something that all of us, I have to remind myself the same thing because I get excited and I FOMO too. The key is actually to minimize losses and string together the wins. We always hear about the individuals who made the 10,000x gain or the 1,000x gain. He only had $10,000 and today he has $2.8 million. Yeah, people did that. They invested in Doge. They invested in Sheeb. They invested in Luna. And guess what? Many of them are crying in their Cheerios today because they didn't understand basic investment advice. 3 Arrows Capital did not understand basic investing advice, basic investing strategy, investing fundamentals 101. Guess what? Voyager, Celsius did not understand investing 101. They were not diversified. They did not manage risk. And they basically had a chance of a lifetime to change their lives. And today they're failed businesses. They're disgraced individuals, disgraced CEOs. But that doesn't have to be you. Play it smart. Play it safe. Expect the unexpected. Invest defensively. Go for the singles and the doubles. Focus on your more safer strategies. Diversify a little bit more. Only bring in risk capital. Hey, that's a hodgepodge of common sense advice that I think everyone needs to pay attention to. Ladies and gentlemen, I don't care what the Federal Reserve does. All I know is cryptocurrency is here to stay. I don't care what the job market does. I'm telling you right now, ladies and gentlemen, you and me can get ahead regardless. We're not going to let anyone stop us. We're going to keep moving forward. We are here early. We are here before the masses. Thank you so much for listening. Decentralized cryptocurrency equals freedom. Make certain you smash that subscribe button, click that like button. I want you to hear what this entrepreneur had to say. Patrick Bet-David, this whole interview was great. It was a 2-hour video. I listened to it today. I'm probably going to listen to it again. It's a really good video. As an entrepreneur, it impacted me a great deal. I've known Patrick Bet-David for a long time. He recently sold an insurance company. This is Graham Stephan, enormous YouTuber. Patrick Bet-David also is the host of the Valuetainment YouTube channel. He is a true financial services expert, if you will, who technically could probably legally give you financial advice. But Graham Stephan asked him about the recession. This is before Jerome Powell's comments. I want you to listen to what he has to say.
What are your thoughts about an upcoming recession?
I mean, obviously, by definition, if you were to take your Series 7, okay, securities license, and a question comes up, they showed us the other day on FINRA. Definition of recession.
No, of course, yeah.
If you're taking a Series 7 exam, the right answer is 2 consecutive quarters. If I answer 3, I failed that question.
Which means we're in a recession right now.
Have to put 2 consecutive quarters. So we're officially in recession where we are today. How bad is this going to get is going to be predicated based on, are we going to do more bailouts? If we do more bailouts, that money's going to roll to the top. If we do more bailouts, if we do more stimulus money, the people at the top get that money. They get the most of that money. People who got $600 stimulus, who benefited them more? Them or Amazon, because so many people spent that $600 stimulus on Amazon, making Jeff Bezos richer. The money rolls to the top. Going to print more money. It's going to roll to the top. If we're going to do this inflation reductionary whatever plan, the money's going to roll to the top. I mean, here's what's crazy about myself. I've made millions of dollars in my life, but 2019, I made more money than my entire life. 2020 made more money than my entire life, including 19. 2021 made more money than my entire life, including 2020. 2022 so far made more money than all of those years combined. What happened with these money they print and they throw in the market? It rolls up. Guys like me are like, print more if you want to, but It's not a good thing. You know, the right solution today for us to overcome the challenges we're facing, no one would win White House if they ran the right policies today.
You got to respect the guy for saying, hey, I made more money because of these policies, but they are not the right policies to make. I want to play just another 30 seconds or so of this.
The right policies that America really needs would never win the election today. Never. It wouldn't be a popular policy. You need to run some shitty policies to convince people that you're going to give them something for free to win today. That's what's unfortunately attractive today. But if somebody got up and said, hey guys, let me tell you, here's what I'm running for. I'm going to make sure our military gets stronger in the area of cyber warfare and bio warfare. We're going to take our spending a little bit more on that side. We're going to do what we can with taxes. We're going to take some of these resources and try to pay off our debt. And the next 4 years, our goal is to reduce some of our debt, and we all got to get to work. So you're not going to see me too much. We all have something we got to do. You got to pull your own little red wagon. I got to do the same, and let's bring America back to what it was before. Wait, what do you mean? I don't have any policies. We need to take some policies off the table. We need to get to work. You would never win with that.
Mm-hmm.
He's exactly right. But ladies and gentlemen, we don't care about who's got to pull whose little red wagon. We are going to be able to get ahead financially regardless. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.